Happy Friday, everyone. Hello and welcome to this edition of Business Daily. Coming to you live from Seoul, I'm Lee Ji-yoon. Before we get started, let's see what we have lined up for you in the latter half of our program. The Korean government is looking to expand performance-based incentives for public workers, meaning that those who produce better results than others might be in for some extra rewards. What stories made headlines in global business news this week? Collapsed talks over the mega Trans-Pacific Partnership deal, and over in Greece, shares plunged after its markets reopened on Monday. These stories and more are coming right up. Following President Park Geun-hye's nationwide address pledging to continue on with her reforms, related ministries are coming together to devise follow-up measures. The vice heads of 8 related ministries held a meeting on Friday, chaired by the Ministry of Strategy and Finance. The agenda was mainly on how to delegate projects among ministries, the timeline, and promotional strategies for putting reform measures into place and fostering the service industry. Seoul will hold a ministerial meeting next Wednesday to continue discussing on how it will go about implementing such measures. And it looks like public workers here in Korea will have to work harder than before if they want to earn a little extra money, because we're hearing that the government is expected to expand performance-based incentives for its employees. Here's our Han Da-eun with more.
Lack of efficiency and productivity have been a chronic problem in Korea's public sector, where the wage system is based on seniority rather than performance. But a change may be in the works. Following President Park Geun-hye's address to the nation on Thursday, the Ministry of Personnel Management said it's pushing for an expansion of performance-based incentives for public workers. President Park, during Thursday's speech, emphasized the need to reform the current wage system in the public sector to make it more flexible and merit-based. The ministry told Arirang News that the current performance evaluation system for civil servants is divided into 4 grades, S, A, B, and C, but a double S will be introduced for the top 1 to 2% of workers that exhibit outstanding performance. Workers receiving a grade of double S will be paid 50% more than the current bonus for a grade of S. Employees that perform below average will be relocated to a department deemed more suitable. Experts believe the work harder to earn more drive will provide the incentive for Korean public workers to increase productivity. The Personnel Ministry says talks are underway with the Finance Ministry on the issue of budget allocation. The new incentive system is expected to officially take effect by the end of this year. Han Da-eun, Business Daily.
Korea's ratio of tax collection against its GDP is relatively low compared to other countries, sitting at 17.9% as of 2013. This is according to a report from the International Monetary Fund that put Korea's tax to GDP ratio slightly under the global average of 18.8%. This places the country at 84th out of 157 states. Lesotho, a country in southern Africa, posted the highest tax to GDP ratio of 50%, while Kuwait had the lowest ratio at 0.75%. Seoul's income tax revenue to GDP was also slightly under the global average, while its corporate tax revenue was relatively higher, ranking 33rd on the list. Samsung Electronics semiconductor unit has narrowed the gap on its U.S. rival Intel in terms of chip sales. According to the latest report by industry tracker IC Insight, Samsung registered sales of $10.3 billion from April to June, up 10% from 3 months earlier. Last year, Intel's annual sales exceeded Samsung's by 36%, but the gap on quarterly sales in the second quarter was reduced to 16%. Intel kept its top spot 1 ranking ahead of Samsung with a 3% rise in sales. The Korean electronics giant is the fastest growing among the top 20 semiconductor companies listed globally. Now, just 10 years ago, a lot of people headed to department stores to shop, but that's hardly the case anymore. With so many other options now, like mobile shopping and fast-changing fashion brands, big retailers are feeling the need to change up their strategies to win over the hearts of their customers. Our Lee Ji-young has the story.
One of Korea's largest retailers, Lotte Department Store, is having its biggest sales event to date at an exhibition hall twice the size of an average soccer field. Attracting over 320 vendors, some even offer a 90% discount on their original prices. The country's 3 largest department stores already started hosting sales events in July, with steep cuts on the price of overseas luxury goods.
We wanted to lessen the burden of our vendors suffering from excess inventory. We've also launched this event to boost our own sales.
The extended events are set to be unprecedented, starting from the month of July and running up for 120 days instead of 80. Back in the 80s and 90s, department stores were considered a symbol of glamour and affluence. But due to the continued slowed economy, consumers have started to seek out more affordable stores, and the advent of fast fashion SPA brands have significantly dented sales in the clothing and merchandise departments. The growing presence of mobile shopping also poses a big risk to department stores. Many Koreans in their 20s and 30s have switched over to mobile shopping, prompting brick-and-mortar stores to come up with new strategies. Now, department stores are targeting the younger age bracket with street fashion brands and have invited popular online shopping malls to have an offline presence at their stores as well. They even offer smart pickup services for the convenience of online buyers and host various events to attract customers. As the country starts to slowly recover from the impact of the MERS outbreak, sales at department stores are bouncing back as well as they continue their bid to find a new path for growth. Lee Ju-young, Business Daily.
Korea's listed firms posted weaker than expected earnings in the second quarter, with the nation's big 3 shipbuilders dragging down the overall figure. But quarterly earnings of the remaining firms without the 3 shipbuilders actually exceeded market expectations by 2.5%. According to market researcher FN Guide on Friday, operating profit of 100 companies traded on the main Kospi and secondary Kosdaq tallied a combined $17 billion in the April to June period. That's 18% lower than the projected $20.8 billion. Korea's top 3 shipbuilders, Daewoo Shipbuilding and Marine Engineering, Hyundai Heavy Industries, and Samsung Heavy Industries, all suffered heavy losses from a delay in the construction of offshore facilities amid low oil prices. And now let's take a look at how the markets fared here in Seoul today. Seoul shares ended lower on this Friday as investor sentiment was dented by prolonged uncertainty over a U.S. funds rate hike and China's economic slowdown amid weakening competitiveness of the top listed firms. At the closing bell, the benchmark Kospi dropped 0.15%, finishing the day at 2010.23, while the tech-heavy Kosdaq went up by 0.5% to end at 751.49. On the foreign exchange counter, the Korean currency lost ground against the greenback, ending at 1,167.41. Now, time to take a look through some of the global economic stories that made headlines this week with our Eunice Kim. Hello, Eunice.
Hello, Jiyoon.
So the economy back here at home is not doing so well, but then I heard things are even worse over in Greece.
Yeah, that's right. We have fresh unemployment figures that show that 1 out of 4 Greeks still did not have a job in the month of May, marking a 35-month streak. And the story extends to its stock market. Monday through Wednesday, bank stocks lost 63% of their market value, though they did manage to bounce back on Thursday's trading day. Now, things were off to a murderous start on Monday. A near 23% drop was observed when the Greek stock market reopened for the first time in 5 weeks. Now, you'll remember, banks were closed while negotiations on Greece's future with the Eurozone were underway. bank shares did plunge 30% during the trading day before controls kicked in. It was the worst daily performance since modern records began in 1985. The main Athens stock exchange ending down 16% compared to the Wall Street crash of 1987 when it dropped by 15%. Now, both Athens and the European creditors agree Greek banks will need to be recapitalized by the end of this year. Now, moving over to Asia, at a time when many emerging economies are struggling, Japan, which has had its share of financial problems, is getting a bump up in earnings this season. According to data compiled by Bloomberg, 159 companies on Japan's Topics Index beat analyst estimates on earnings per share compared to only 74 companies in the MSCI Asia Pacific Index, excluding Japan, of course, doing the same. Now, some of the biggest winners were tech companies, including Sony, which saw its profits triple in the fiscal first quarter. Their gains are being attributed to the cheap yen, thanks to the Shinzo Abe administration's policy of monetary easing, which the Bank of Japan did announce today would hold at current levels.
All right, well, now the biggest story of the week is perhaps what did not happen on the trade front. An announcement was expected this past weekend on TPP, or the Trans-Pacific Partnership, but I hear no breakthroughs.
No breakthrough, and this would have been a huge undertaking, especially at a time when trade is falling on the global stage. Bringing 12 countries to one big trade deal would have been a big deal. But that meeting in Maui, Hawaii, did fall short of tying up 5 years of trade negotiations. Let's go ahead and take a look.
It's an unprecedented trade pact that aims to cover 40% of the world economy. Representatives from 12 nations, among them Singapore, Australia, Malaysia, and Canada, dug into 4 days of talks in Hawaii to iron out final positions and reach an agreement on the Trans-Pacific Partnership, led by the U.S. and Japan. But frustrating expectations, there was no breakthrough.
We've made significant progress and will continue to work on resolving a limited number of remaining issues, paving the way for the conclusion of the Trans-Pacific Partnership negotiations.
Those with knowledge of the highly curtained talks say the big framework is done, but settling the web of local regulations on industries from America's pharmaceuticals, Mexico's trucks, to Japan's rice is where the conversation has stalled.
The participating nations share the belief that they will continue to work towards an agreement soon.
Soon is important. The talks ended with no scheduled follow-up, though ministers have agreed on the need to reconvene at an early date, perhaps later this month. By Washington's timeline, the deal is already behind schedule to get it in front of Congress for ratification before the end of 2015 and before presidential politics get in the mix. Canada has also called October federal elections, raising the concern that the parties at the negotiating table now aren't guaranteed to be there when it comes time for implementation.
All right, so we've talked about TPP before, and Korea is on the sidelines observing how these negotiations pan out. Has Korea responded to this in any way?
Well, in fact, the Trade Ministry did hold a meeting on Wednesday in which it affirmed that a successful conclusion to the first round of TPP negotiations would be very important. At the same time, it said it would continue to monitor the developments and analyze the final pact to determine whether it would be in the interest of Korea to join in.
And I understand that other countries are also looking on as well.
Right. There are at least 5 countries that are watching these developments unfold. Korea, Taiwan, Thailand, and the Philippines, as well as Colombia, are those nations that are watching on. Should this ambitious pact pull through, the value of it would not be so much on lowering tariffs per se, but on setting new trade parameters, such as protecting labor rights and strengthening environmental safeguards. And though China is not in the mix at this point, June, there is certainly hope that the world's second largest economy would join in pretty soon.
All right, so I guess we'll have to wait and see how future negotiations pan out.
Absolutely.
All right, thank you so much for coming in today, Eunice.
You bet.
And that wraps it up for today and this week. Hope we were able to walk you through the week with fun and in-depth business news that matter to you. We'll be back next week with more, so don't forget to tune in then. Thanks for watching and have a great weekend, everyone.